Today in our channel, we wanted to talk about which loan is the best for you to being a future homeowner.
Right, so everybody has different needs and wants in their loan journey, and we're not loan officers, but we hear on the other side of it why people chose what they did. So we're going to give you on the front end what instead of the back end, what people are thinking of when they choose different types of options, and it's not just what I immediately came to mind. Which of course, for me, the very first thing we're going to talk about is fixed rate mortgage, and I thought that's the only one you should choose. So initially, before.
Exactly. Therefore, what is good about the fixed rate? Fixed rate, basically, you have the prediction of your monthly payment. It means you don't have any surprises. Is stable every month because your interest rate is not going to change.
Right now, it is going to have a fixed interest rate, and it's going to be higher than some of the alternatives. But this is people who are going to look at this owning a home as a long-term thing. It's not a short-term thing for you. It is a long-term thing. And honestly, that is, again, what I thought everybody was doing when it became to loans. So these other type of loans, I only ever heard bad things about, but there are reasons why people choose them all the time.
Exactly. The next thing we wanted
Before
to
we get into that, I think we need to do our introduction.
Yes, let's hit it.
Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you can call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below.
Now we wanted to talk about adjustable rate mortgage or ARM that you said. Of course, the pros of that, as my wife also mentioned first, is lower initial interest rate most of the time. Which is good at the beginning that you have your potential lower rate in the beginning of a payment.
Right, and now, yes, I know what happened in 2008 was like all the interest rates went up and then everybody got, lost a lot. Now, the other side of it is interest rates are higher right now, so there's a lot of people who are betting that interest rates are going to go down, or they're not sure what they're going to do with their life, and they don't really care about 5 to 7 years from now because they're going to be gone in 3 or 4 from wherever they are. So there is potential for decrease. There is a potential for you're going to go somewhere else in the future. But the biggest fear, of course, is that your rates are going to go up so much that you can't afford your house anymore.
Exactly. But it's still, you can refinance it. It depends on your loan term that you need to initially discuss with them, again, to have a fixed mortgage if you want to switch.
But also, if you're planning on getting a higher paying job, or because you're finishing school, you're expecting to be only in that house for 4 years, not more than that, because you're moving to cross country back home to wherever you came from, and this was just a college place. Those are all good reasons to consider an ARM, and to really consider an ARM it can be a smart financial choice because interest rates can be initially lower, and it will be fixed for that 5-year term initially, or whatever, 1 year, 2 year, 5 year, 7 year, depends on the ARM that you're looking at.
Okay. The next one is we wanted to talk about FHA loan, which is gonna talk about that. What is the pros of the FHA
No,
loan?
we have a whole videos on FHA, VA. These are government-backed loans. But really,
Exactly.
we want to remind you that when you're talking about fixed or adjustable, FHA is typically a fixed rate, but you definitely don't need as much higher credit score, and you don't need as much down as you might with other loans. So you're going to get 3.5% down, and you need a 580 credit score. Yes, you are going to pay a mortgage insurance, and it has limits, so we're not talking about $1 million homes. But this can be great if you're looking to get to your first home. So it's just something
like
to
a
consider.
limited saving or basically lower credit score. This is going to be your optimum way. The next one is the VA loan. Thank you for your service. We know that you did a lot for the country, but this is not for everybody. It's just for those that they have this eligibility.
Right.
And we know that you don't need any down payment. Mm-hmm. What else?
It's a 100% funding. Closing. You do need the funding fee. That's the funding fee. However, there is a lot of benefits to this. So you're going to have zero down payment. If we get the right house, we're going to get you closing costs. We've done that for many times for veterans. So understand that veterans and military do have these extra payments and some amazing benefits that, come into play. And you do have to live in it for a while, but you don't have to live in it forever. You have to live in it for a while.
Exactly. And also understanding that your monthly mortgage is not just your principal and interest. It comes also with the property tax and homeowners insurance. Property tax, you don't have that much of things control, but homeowners insurance every year you can shop for.
Now, a lot of people are going to ask us, well, where can we get the grants and all of that? The grants, right? Where can we get the free money? Hey, I want free money too. And I'm going to tell you the best places to get the free money is actually the banks. We're happy to tell you which banks are giving good deals right now, but it's going to be up to you to go after the deals, and not everybody's going to have the same deals. And there are some good deals out there with lenders, 100%, but they're going to be there, and you have to kind of find them. So we're happy to tell you about the ones we know of in our area as well.
Exactly. The next thing that we wanted to talk is the role of the second loan. What is that?
Okay, so basically, some lenders are allowing you to use your you can use your house, the second loan for down payment, closing costs. So if you don't have the 3.5%, there are loan programs out there to allow you to buy that home, and it's a kind of a second loan for like $10,000 to cover all of the other stuff.
Exactly. Now, all of this thing, really, we wanted to highlight the benefit of the home ownership, which the first one is building equity.
Absolutely.
Which over time, when your value of your home increases every year, and you're also paying part of your monthly mortgage toward your principal, then you have lump sum equity in your house, which is going to be a financial benefit for long term if you have a family or you're growing your family.
Or over time, your payment can actually get reduced. So what happens if say you own a home and you paid down more than 20% of your loan, you can refinance with the PMI if it was FHA. You can, if it's conventional, you can just ask him to drop that off, and that's going to lower your monthly payment. So by being able to look at these financing opportunities, you can see ways you can reduce those payments over and over again. So which means that you're going to, it's the opposite when you're renting, because rents always increase. I've never seen rents not increase. Even in 2008, all they did was just kept my rent the same. They didn't increase it that year. Big whoop. So there's that as well. Your monthly expenses will continue to ever increase if you are not in a home, whereas if you're in a home, it can actually go down.
Exactly. Which brings us to the last thing that we wanted to talk is the financial.
There's always a solution to the problem.
Solution to the problem. And you can go different avenue, find the different lenders, find the different programs, and basically find different finances that fits your financial portfolio, no?
Right. So I can tell you the most common ones we see for people buying a home is going to be taking money out of their 401ks, their IRAs, family gifts, co-signers, just having a very plan of action in order to save. I've seen people get second jobs in order to just have a savings account ready for this, so ready to go. So there's always a solution to the problem. So if you want a home, you can absolutely have a home. Nobody's stopping you. At least in our area, you can definitely still afford a home. We'd love to talk to you about that more. But you can find the right product for you.
And don't forget to call us at 252-327-3357. Al and Victoria here to help you. And see you in our next podcast and video.